Good afternoon, Blacks Academy. This video is born of a conversation I had with one of my students last week on how he had lost faith and, lost faith in the trading process, his trading process. It just wasn't working for him. And it was, of course, the result of losses. So, in thinking about that, my story, and I thought of one trader in particular that everybody should know that knows trading. And I'm hoping that this will give you some insight into the importance of loss, not for the loss of faith, but what it actually does for the trader. Most people should not be trading. The reason is it's a lossy environment. It's one in which you can lose confidence. You can definitely lose capital, more than you brought to the game with, and you can lose a lot of time that you could focus on other things. But for the few of us that are traders through and through, we love the game, we love to improve, and we're students. Loss is what actually brings you success. And if you don't believe me, I'm going to take a story from the pantheon of trading from somebody who, once again, if you know trading, you should know this name. The name I'm referring to is Dr. Jim Harris Simons. If you've never heard of Dr. Jim Harris Simons or Renaissance Capital, you have more research to do, but I'll give you a head start with this. Dr. Simons, outside of being mine and probably a million of other traders, the inspiration for us doing our trading, he was the founder of what's regarded as the world's greatest hedge fund. Now, granted, there's always some controversial debate as to who's number one. This is the Jordan or LeBron thing. Maybe a couple Kobe's in there as well. But pound for pound, Renaissance Technologies is, by my estimation, by and large, the best hedge fund that ever did it. Dr. Simons, who died earlier this year, is the greatest at what is a very specific version of trading called quantitative trading. But as you can see by the title, some people call him an investor. Others that know what he does calls him a trader. But the Medallion Fund, which is the flagship or the best fund that Renaissance produced, was wildly successful, returning over 66% over a period of about 30 years. Their investors saw an average of 35% after they took these hefty fees. And he made his investors over $100 billion, and of course, making some money for himself. The important part I already talked about was what made Dr. Simons unusual. He was a mathematician. He was not a Wall Streeter, not an economist or finance guy, knew nothing of it, but his genius was in understanding numbers. And to those of you who say that, you don't use the numbers or the math that you use in school, that might be one reason that you're not a billionaire. His other characteristics, however, might be also why you're not a billionaire. Dr. Simons was known as the Quant King. Again, quantitative finance, quantitative trading, whatever you want to call it. And he ran this Renaissance Technologies, which is not a real hedge fund name. You have tons of capitals or managements that's in there, but Renaissance Technologies was in fact probably one of the very first fintech companies starting in 1982. And it currently still runs, but he was a chairman and CEO from 82 until 2010. But before that, of course, and this is where my inspiration came in for the guy, he was a successful mathematician, crypto analyst, and code breaker for the U.S. government and the military. And he also served as a professor of mathematics at MIT and Harvard. And while he was living, he was the chair of the mathematics department at a slightly lesser known school, but also a very brilliant school, very brilliant math department at Stony Brook University. But the reason why you're here is probably not because of his math, but at the time of his death, he was worth about $32 billion, and he was often called the world's smartest billionaire because he had won tons of awards and written these groundbreaking papers basically in geometry. For lack of a better word, we know Simons as a trader and investor, but he was a geometer at his heart. And the thing that you'd have to know, the reason why I'm talking about this guy who seems to be at the pinnacle of the world, is that, like you, as a trader, he probably had some success in another field like you have. He had wild success before he came to trading. And a job change is what started Simon's career down this path. For political reasons around the Vietnam War, he had to change career from code breaking because he had some outspoken words about the war, and that just did not fit well with one of the nation's finest code breakers speaking ill of what was going on politically, so he had to change endeavors. So one of his friends who was closer to the action in Wall Street was like, hey, why don't you come on and let's try to make some real money? Simons was reluctant, but he always stepped to a challenge, and especially a challenge that was mathematic. And really, the hardest part of doing anything is often learning something new. One of the characteristics outside of genius that this guy had was being able to learn new things. So you might be wondering why I'm talking about Jim Simons making all these incredible returns and, making hundreds, billions of dollars. How does this relate to losing? Well, his story and Renaissance Technology story and my story, most traders that are successful go through periods much longer than you can imagine of loss. That's right. Renaissance first 12 years, they not only underperformed the market, but they trailed by a large margin. You can see here from the graph, if you look at the S&P 500, which is a passive investment, means you can put some money in the S&P and just let it go, versus his quantitative analysis only hires engineers and physicists and mathematicians, really smart people fund, underperformed by the S&P earning $8.18 starting from $1 to the Medallion Fund only earning $1.65. It doesn't take a rocket scientist to understand that you'd much want to put your money in the S&P 500 than his so-called Medallion Fund. But I thought we were talking about all their gains. When did those come about? Well, often in trading, losses come long before the gains. Long before the gains. And Simons and his group, they had to have patience to see their goals all the way to the end. He knew that he had something. He knew that he had to develop algorithms, which are basically rules to trade. This is nothing more than a trading process. It's just a trading process for computers. And they had to have the persistence to work at it. And this is one distinction that I like to make about trading in general that I'm going to stop and put some emphasis on. Good traders understand that loss is a part of the game. And I don't mean just one loss. As a trader, even a wildly successful trader, you're going to have strings of losses on a daily, weekly, monthly, even yearly manner. Now, we've talked about this Medallion Fund for years, for decades, not having losses and having compound returns multiples larger than the S&P. But you can see for this first 12 years, based on their structure, based on what they had, they were losing out. And some years were actual negatives where they lost value, but they were losing out to passive investors. So you as a trader, not a quantitative PhD, you still have to have these same qualities as these guys did. You still have to be patient. You still have to have persistence so that you can develop good timing. And I bring up this point about persistence. I understand trading is about money, but if you're going to stay in the game to actually make it to the money, it can't be about money. This is why at Black's Academy, I teach people that to trade well, you have to fall in love with trading itself. You have to fall in love with the process. You have to fall in love with what you're building, what you're doing, and who you're becoming to have a better chance of making profits. Simons loved what he did. It was mathematics at heart. And as a result, The continuation story is the one that we're talking about, not how they started. As you can see here, after 1990, they sort of found their footing, as so to speak, and even charging some of the highest fees that hedge funds charge. Simons and Renaissance Capital evolved, and they end up beating the S&P by a factor of 1,770%. More than 17 times as much money. So what started out as a battle of $8.18 to $1.65 ended up with the Medallion Fund earning $1 turning into $758, with the S&P turning into $40, a little bit over $40. Just imagine what we'd be talking about if Simons and his people decided to stop. If they didn't love what they do, if they weren't impassioned, emboldened, and challenged by what they were doing, if they simply stopped. So the question I will pose to you, how many traders quit before they become legendary? The answer is quite simple. Most of them. Most of you watching this video will quit before you have a chance to become legendary. And the reason is simple. You're looking for the wrong things. You understand the risks of trading, sure, but that understanding of risk does not help you stop losing money. And as you lose money, you will lose confidence, you will lose faith, and you'll be like a lot of students, and you practically have to give up. One of the reasons why at Black's Academy I encourage students to start demo trading is so that you get the processes down in an environment that only costs you time and effort, but doesn't cost you capital. And I understand that some of you have been told that it's not the same experience, but I can tell you from somebody who started with a demo first and then moved into real capital, it doesn't need to be the same experience. You'll learn what you need to learn when you start dealing with real capital. But if you don't have the skill set at first, you're not going to learn what you need before you probably run out of capital. This is one of the greatest risks to small and young traders as they start out their careers. But the difference with a fund like Renaissance, as you can see, when you fall in love with the process, when you obsess over the things that, not what trading produces in terms of profit, but what it does for you as a person, what it does for your knowledge base, you can start to grow just as their fund did, exponentially. It's not a straight line. Here you can see Renaissance gained money and is still gaining money to this day. This Medallion flagship fund incredibly still gains even after Dr. Simons has passed. Why? Because they developed systems, processes, people, the culture. It doesn't matter what market conditions. In fact, oftentimes, minus 2022, the Medallion Fund often gained more money in market stress than it did during normal times. And oftentimes, much unlike some traders, this fund was able to trade anything that was publicly traded and liquid, which means stocks, bonds, futures, foreign exchange, other derivatives. They traded everything because their process worked across the board. As you look at your trading, look at your successes, look at your failures. How widespread are they? How universal are they? And to that point, how much have you worked to make it that way? I get it though. When we get out here and get online, get with our groups, we see lots of encouragement, and there should be a lot of encouragement, especially when you first start out. We think of success as being some linear thing. If it was on a chart, it would be a line that goes up and right, and you use planning and strategy and management and teamwork to get to the level of success that you often dream of. But trading itself, it's a messy endeavor. And by messy, I mean it doesn't work the way that you plan. Not to say that you don't plan, but it's just not going to work the way that you planned out. And no matter how great your management team is, they still can't trade for you. No matter how good your strategy is, if you don't have the proper tactics and tools, your strategy is useless. Teamwork, I see a lot of discords. I see a lot of groups, hear a lot of people talking about trading now, but without the skill set, individual to each member of the team without the experience, your teamwork is just a glorified social club. And that's cool too, but it won't help you make money. And as Mike Tyson says about plans, everybody has a plan until they're, well, you can probably finish the quote. So, given the fact that trading is messy, that losses are going to come, you should understand that success itself will not look like you envisioned. In fact, you yourself will probably not look like you envisioned. You may be in the wrong market. You may be trading at the wrong times. You may be trading with the wrong strategy. But until you allow yourself to do the things that traders do, your plan, which is, again, goes up and to the right, has no chance against reality. And that is the sad reality for so many traders. And it simply doesn't have to be, but most of us simply have to adjust our expectations first. So, again, you must lose to win at this game. I can't tell you about other endeavors. There are far more other entrepreneurial pursuits that I think will earn you more money than trading. But most would-be traders miss out on what really creates success in the business. You have people like this who have genius level intellect who fail out long before they get started. Then you have guys like Dr. Simons that make 40-year runs and billions of dollars and contribute to the greater good of society. Because, of course, as you might imagine, this guy was one hell of a philanthropist. But the main things as a trader, no matter where you come from, no matter your educational background, no matter who you are, trial and error are the basis of good invention, whether you're talking about science and discovery, but it's also perfect for developing good trading technique. You have to try many things and fail at those things and understand and learn from what those failures mean. This, of course, means that the other thing that traders have a problem with, especially online in today's date, is accountability. You have to be honest in a world that tells you everything else but what you really need to know about trading. A world that lies to you about how much money you can make on a daily basis when even traders don't often make money every day, not all traders. So you have to be honest about what works, what doesn't. This is how you make the best of your trial and error. And also, good traders are a lot like Dr. Simons. They never stop learning. So if you understand this, then you understand the importance of loss and that it's a part of the winning recipe for trading. This is something that we talk about at Black's Academy. And I hope that you understand this message is for you, whether you're trading and winning some, whether you're not trading at all, or you may want to quit. It's probably just the fact that you haven't developed the skills just yet. And as Dr. Harris Simon says, James Harris Simon says, in this business, it's really easy to confuse luck with brains. I think the smartest traders understand that luck plays a part, just like skill plays a part. And the only way you're going to be able to do that is to be able to lock in and learn. Come learn with us at Black's Academy. And if you're already here with us, don't give up just yet, especially before you develop your passion for the game that is trading.